strategies using Nadex Knockouts and Call Spreads. We've got Bryan Caprice from Keep Trading Simple. Bryan, it's all you.
Yep, and everybody that has not gone the YouTube route yet, make sure all you have to do is when you go to the Nadex YouTube page, you don't have to set any reminders whatsoever. All you have to do is hit the basically like I think it's called subscribe, and then hit the bell icon. It's a notification icon. Whenever we go live, it'll actually send you a notification on your desktop that, hey, we're going live, and it helps you track it a little bit easier instead of trying to set some alarms and have it go off on the, nothing worse than the day you're trying to sleep late that the alarm goes off. But anyway, very, very simple. Like, subscribe, and click the bell notification icon, and you'll be able to watch us every morning. Reason I'm saying that is because one of the things that I talked about today was some amazing 15-minute opportunities at the open. Today was another perfect example of how it happened, and I'll show you really kind of how I'm kind of using a niche inside of Nadex, using knockouts and call spreads, predominantly the shorter duration call spreads right now, to really just kind of dominate the opens. Yesterday was 2 out of 4 triggered. Today was even more. So I'm going to show you guys what I'm doing and how I'm using them. You may say, and you look at this and you say, knockouts, call spreads. Man, I don't look at those. I'm just here for the binaries. Every product that Nadex has pros and cons to it. I feel like a lot of times, not everybody fully understands knockouts, and I feel like call spreads are even less understood. But when you understand, kind of the nuances and the bells and whistles of how they're different than the binaries, I think the opportunity is actually almost greater than binaries sometimes. I mean, again, there's obviously times binaries, trump the other two, but a lot of times I'm finding out that these two kind of hidden assets are really the way to go. So with that said, let me just jump into everything. If you guys have any questions, I actually can't. Todd, I don't know if you have it on the settings. I cannot see any questions. So if you guys ask anything, Nadex will have to answer it. Normally, I have a questions panel.
I'll take care of the questions, and if need be, I'll shout out and interrupt you because I have no problem interrupting you.
Sure, yeah. It's like the morning show all over again. All right, so let's go right in. Before, obviously, we dive too far, I have to make sure I cover the Nadex risk disclaimer because it is recorded and it does get sliced up. I have to make sure that I cover this. But it's very important to understand as well. Understand that trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost of another transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures, and we'll be kind of talking about all three of those today. And Nadex is a registered trademark of the IG Group. All right, so the handy-dandy agenda. So this is what we're going to be covering today. First thing is, I know Todd just taught you guys everything you possibly could need to know about call spreads, because that's what he promised me, that you guys would learn everything that there's possibly you could have learned inside of his 45 minutes. He'll give me a hard time for picking on him about that tomorrow. But what I'm going to do is I'm going to do the quick recap of really what I see is the biggest perks and what you should be looking for. Then I'm going to talk about where opportunity lurks. There is so much opportunity to trade kind of the strategies I'm going to be talking about today using these two assets. It's all over the place. I'm going to show you where it is. We're actually going to go into the calendar, and we're actually going to find some opportunities for you guys to trade this week. So if you're taking notes, hopefully you can follow along, but you should also be able to take advantage of the things that we're talking about. Then we're going to talk about the limitations and advantages. This is really where I see it's one of those things that if somebody looks back 6 months or a year from now and listens to today's presentation, these limitations and advantages may be a little bit different. The reason I say that is because understanding current market conditions, that's why these things are working so well. Okay. If we're doing nothing but, besides every single day it goes up 250 points every single day for the next, year straight, obviously the advantages and disadvantages, limitations are going to be different. Right now, we are a very whipsaw-based market. One day we're up, the next day we're down, the next day we're back up again, the next day we're back down again. And again, that's why these are working so great. It's taking advantage of volatility, and trust me, COVID has definitely, definitely provided a lot of extra volatility. And then we're going to talk about, selecting the right vehicle. as I mentioned, there are call spreads, there are knockouts. How do we find which one? There's a lot of expirations on the call sides, the call spread side. We'll talk about really how you can pinpoint which is going to be best for you and which trading opportunity. So again, it's a section that you kind of got to take notes. We're going to actually go into some of the charts and kind of show you kind of what would have worked today, what didn't work. This week has been an interesting kind of scenario unfolding with the dollar CAD. You may know nothing about currencies, but if you like making money, you should be focusing on what the dollar CAD is doing this week, because this is something that Todd and I covered in the market show. With everything happening in oil, if you don't know, the dollar CAD is a proxy for oil. Really, the Canadian dollar is. After getting beat up for a week, 2 weeks straight, we expected oil to make a reversal, and it has. And because of it, the CAD has gotten strength, and the dollar CAD as a currency pair is just getting hammered. So even though we're only 2 days in, there's been some amazing opportunities. We've had, I think, four knockouts already break to the downside. And again, had you been, a little pumped for the, the morning show, had you been watching that, we had talked about that on Friday. Of that was the setup to look for going into Sunday night. And it's, we're on the Tuesday and it's still rolling. And then also part 5 is making a 2022 goal. So I absolutely hate when you guys come here, you watch these things, and then you do absolutely nothing with it. I want you guys to have a goal after today, whether it be to incorporate one thing you've learned from today, whether it be for me or any of the other speakers. I want to make sure you hold yourself accountable to doing something different in 2022. We are so close to it, right? We're within 3 weeks. We're right there. Now's the time to do the planning. Don't wait till the first and say, well, maybe I'll do this differently, or maybe I'll do that differently, or maybe I'll go from demo to real, or maybe I'll fund my real account. Or maybe you don't even have a demo yet. In which case, as soon as we're done today, you better go get that demo. So I want you guys to have a goal that is an action-based item that if we talk in 30 days, I could ask you what your goal was and have you accomplished it. If you do that, I'm sure you're going to be better off than where you are today. So I want you guys to be serious about that and follow it. So let's go right into and just kind of do the quick recap of the products. So knockouts. All right. So I'm not going to read it, word for word from the slide. You guys can, get the information. You can read it probably faster than I can say it. Although I know I talk very quick. The biggest thing about this is what I consider the long-term contract that Nadex has. It is obviously that they expire at the end of the week. They are great trades to set up on Sunday nights, particularly even in the kind of Monday morning as the U.S. traders are stepping online. The nice thing about it is because of the long duration, it gives you more time to be right. There are Mondays out there, and everybody's had a case of the Mondays before, where just nothing happens, right? Just nothing happens. You just can't drink enough coffee. You just can't get motivated. The market just can't do the same thing either. Knockouts give us a little bit of a leeway to do that. At the end of the time frame also is a convertible non-binary expiration, meaning at the end of the week when it expires, if it does nothing all week, guess what? It looks just like a call spread. Whatever value you've gained in there, you get. It's not like an all or nothing type scenario. With the market that we have now, where one day it's up, one day it's back down again, this is one of those things that for swing traders in the market right now, swing traders, they keep their positions a couple days to, up to 2 weeks. Those guys and gals out there right now are not real happy because, we got blasted one day and then 2 days later, we're back up to the same exact spot. There's like no movement. Well, inside of a knockout, unless it hits one of the two sides, it does have a value at expiration. So that's kind of one advantage to it. It does have a pre-written profit and stop loss. Now, for me, this is a pro and a con, okay? If you're new to trading, it's definitely a pro because, again, your stop loss is already there. Again, you always got to trade with a stop, but you also have a profit target. One thing that is very, very common for people when they are trying to trade binaries is they email me and they say, hey, listen, I just don't know how to get out or when to get out of these things. I was right. And then all of a sudden at the end of the day, literally like knew that it was going to expire. It came all the way back and closed right above the binary and then went all the way back down again, 30 seconds later. Why did it do that? Well, there's reasons it does it. There's reasons that there's different times of the day. And again, you got to understand the mechanics of the market. But if you had used a knockout, again, it already has an ingrained profit target. So when you're brand new to this, if you guys are not experienced, having those other two orders, you should have that on every single trade you make anyway. A knockout already has it in there, so it's kind of a all-in-one type, product for you guys to trade. Now, it does have on-demand contract writing, and you may look at that and say, "Huh? What do you mean on-demand? What the heck does that mean? I don't see that anywhere. On-demand? Yeah, it's a term that I don't use often. Okay, What I mean by on demand is it has a close proximity to price. Okay. This is one of the biggest pros for a knockout. When binary contracts are printed and call spread contracts are printed, that's it. They don't move. They stay. A knockout, based off of how it is, it moves with price, meaning that if something falls down and gets taken out, a new one is printed right on top of it. So it's always in somewhat close proximity to price. So you have a lot more ability to actually trade it. There are days that the market moves so much, by the time that the actual binaries come live, the price is so far past, it doesn't matter. None of them are even close. There's nothing to trade. That can't happen with a knockout, okay? The reason why I'm bringing this up is because one of the big opportunities using call spreads and knockouts, but particularly knockouts in general, is news. If there is a huge explosion in price in news, guess what? It's too late for your binaries and call spreads. If you didn't get in beforehand, which again, we'll talk about that, there's no way to play retracement because there's nothing even close out there. That's where knockouts are important, okay? After a huge run up or down in price, everything else gets taken out except the knockouts. Once it stops and stabilizes, it gives you the ability to take a reversal. Now, if you guys have watched the parabolic retracement webinars I've done, you know it moves very, very fast with kind of a really unexpected news release, but then it takes a little bit longer to kind of retrace back again. Well, guess what? If you're using a daily contract, it's probably going to take longer than a day. So call spreads and binaries aren't necessarily the best, but that's where knockouts are key. You see that huge parabolic move, look for the parabolic retracement with a close proximity knockout, okay? Now, it's set and forget low maintenance. Yeah, it's one of those things that you don't have to worry about expirations each day. Again, you know you're protected on both sides. So if it goes really, really far, you don't have to worry about it whipping back. So I would say it is a little bit easier to manage. A lot of people are very confused about when I take my binary off. How do I, when do I do the call spread off? Knockouts, like I said, it's a little bit simpler for new people to use, right? Now, call spreads. In my eyes, this is like the black sheep of the Nadex family. Right. It seems like one of these things. Nobody understands call spread. It is kind of a combination of both. Right. In the options world, spreads are the most popular thing that exists. Everybody knows them. Right. The bull call, bear put. There's so many different ways to play spreads. But with Nadex, what it does is it trades more like the underlying asset. At expiration, it does have an actual value. So it's not like a binary in that sense. And that's why I absolutely love it. It does have it in the money. Now, unlike a knockout, it has an out of the money as well. So, and again, it does have, I forgot this one, I skipped it. It does have both short and long duration contracts, which is, in my eyes, it's actually my favorite part of this. The reason I like it is just like a binary, like a shorter duration binary contract, a call spread on the smaller side, the risk and the entry tend to be very, very small, right? You don't need a whole lot of movement. You can blow them out. An example, and this is something that happened last week on some pound news. I was in the middle of my chart school, so it was not unfortunately, it was not my normal size position, but it was, it was one of those things, whenever I can get something for a teaching opportunity, I want to make sure I take it. I was able to get into an out of the money pound dollar 2 hour duration binary contract, and the risk was $4. So it cost me $4 to get into this trade, and $1 for the contract, for the transaction fee. And at expiration, it didn't blow out the top. It closed down at $31. So there was $4 worth of risk with $31 payout on the other side. Now, had I followed my rules, if I wasn't broadcasting all at the same time, I could have put different contracts. But you guys can see how that can turn into a really, really nice day. $4 worth of risk, right? $4. Again, short duration contracts have lower risk associated with them a lot of times, particularly when there's an out of the money. Now, that's the advantage of a call spread over a knockout. A knockout doesn't have an out of the money. See where I'm going with this? Like a binary, out of the money contracts have a lower probability of being correct, but they also have lower risk associated with it, lower capital requirements to get into them. Okay. That's kind of where I want you guys to get and be able to understand this. Okay. Taking advantage of, again, whether it be a big explosion in price is where we kind of look at the one side. When we expect that there could potentially be some explosive movement, do you trade it with a knockout? No, you don't. You trade it with a call spread. Why? Because of the out of the money nature, lower entry risk, right? Lower dollar capital in. And what does that provide? More profit potential on the other side. And if you do have the explosion and it blows it out, great. You would have got paid anyway, right? And a lot of times, because it's in a spread format, a lot of times, not all the time, a lot of times you can get it cheaper than a binary contract. And if it doesn't explode all the way through the top, it only goes about halfway. Unlike a binary, you can use out of the money and still have a value at the end. Okay. So hopefully I haven't lost everybody in the presentation right now. Like I said, that's just supposed to be a recap. If I lost on anything that I just said in the last 5 minutes, definitely shoot Todd a message or rewatch his section. Because like I said, he promised he would give you the Todd's secret encyclopedia of call spread and knockout information. So you guys should have all of that now. Now let's talk about the opportunity. And again, I'm going to show you this in a chart. So if you don't feel like you got it now, if you guys are going to take the quiz at the end, I'm just kidding. There's no quiz, but I'm going to show it to you in a chart. Okay. And I'm going to show you kind of where some of these opportunities are and what it would have looked like today had you been able to use them. Okay. Now, the opportunity is obviously what matters the most. Everybody wants to know, okay, well, this is great. When can I trade it? I hate people that give out strategies and they're like, okay, this is a Monday morning 9 a.m. strategy. That's it. You can do it once a week, every 7 days. So it's like, oh God, it's going to take 2 months to get enough trades to really even start learning anything, right? By using either of these two things, right, the call spreads or the knockouts, you got a lot of opportunity. So the 3 most common times when market movement exists. Now, again, I know the market moves constantly all day long, but if you really think about it, I'd say that 95% of the movement happens in less than 2 hours a day, right? Think about it. Think about the last chart that you look at. 90% of the daily movement literally happens within 2 hours during the day. One of the biggest times where we see market movement is the market open. Now, it's not just the US Open, okay? The UK Open is extremely powerful, especially if you're trading oil. A lot of times they are setting the tone for the day for oil. We have an Asian session that opens at 6 every day, which again, some pretty good daily opportunity there. You have the UK session, right, at 3 a.m. Eastern Standard Time, which is really the start of the, quote, trading day in the rest of the world, right? The rest of the world is not on New York time. They're on London time. And then we have the US Open. So we have 16 opportunities right there. Now, whether you're using a call spread or a knockout, the considerations that you need to watch out for is, if we're early in the week, knockouts are great. Why? Because you have that long duration, right? Big duration, right? Profit taking is one of those things that you always want to be thinking about when you're talking about market open. As I mentioned, the UK session can be very, very powerful. Even for last week on, was it Thursday or Friday? In the UK session, the ES went crazy. What happens when you have a market open is you tend to have profit taking that comes in. You'll see pullbacks. You'll have reversals. So there's a lot of opportunity around those. And again, very, very easy to map out. You can say, when can I trade? Great, 3 a.m., 8:30, or I guess 9:30 a.m. in the morning, and then 6 p.m. at night when the Asian session starts. So very, very easy, 15 opportunities right there to trade. Of those 3, I would say the US Open obviously provides the most movement for the US stock indices. As a currency trader, though, you're going to have the most opportunity at the UK Open. So you really could trade both if you want. It's really up to you what you guys want to special in. And there's no reason that one is, technically better than the other one. But again, right there, 15 chimes of opportunity throughout the week. All right. Now, the next one is economic news releases. The thing about the economic news releases, and again, I've kind of mentioned this already, a couple things to watch out for, whether you're going to use a knockout or a call spread. Right, that's what the KO and CS means over here. If you guys can see my cursor moving around. Proximity to floor and ceiling. Okay, as I said before, call spreads, when they're printed, they're printed. It doesn't matter if the price skyrockets; they don't move. Okay, so whether you're going to use a call spread for an economic news release, and even so, the market open really, is it near a floor or a ceiling? Okay, if it's smack dead in the middle of a knockout, it's a no trade for me. Okay, kind of the same thing with a call spread, but because call spreads have so many different durations, a lot of times those tend to be a little bit better for the economic news releases. Now, things you need to worry about when you're trading economic news release using a call spread or a knockout is there any additional news? Because if you get some positive news and it starts running it higher, but then another news release is coming in 15 or 30 minutes later, that could absolutely reverse it and bring it back down again, which is the exact opposite of what we want. So it's not necessarily setting ourselves up for the best kind of scenario. And again, I'm going to show you we're going to look at the calendar real quick, and we'll talk about that. And then also time till expiration. Okay. Typically, I like to get, again, obviously with knockouts, they expire at the end of the week, so there's a lot more opportunity there. One of the things you need to watch out, I know there's always like that end of the day rally in the U.S. stock market. Unfortunately, by that time, a lot of the call spreads, it's a little bit too late for them. So you always got to be watching that time till expiration. And that is one thing you do need to watch because it's not Friday with call spreads. So it's kind of an extra moving piece in call spreads. But at the same time, remember, when you're setting these up, you can also get some brand new, brand spanking new call spreads that just printed minutes before a news release. And again, they may be in better close proximity to a floor or ceiling than a knockout, because a knockout, again, when it's rolling, it can be just kind of smack in the middle. And at that point, it's too much risk for me. Now, here's stage 2, right? Economic news releases. I'm going to show you, actually, you know what? Let's just do the calendar right now. I'll come back to the slide. Let's talk about economic news releases. I believe you can all see this chart still, right? This is an economic calendar, okay? All I did is I went over to Daily Effects, went across the calendars and hit economic calendar. If you guys are unfamiliar with the site, it's not the only one. There's many other ones out there as well that you can use. This one's pretty easy, and you can actually set yourself bell icons. There's a little bell icon notification that you can get. You can actually download news releases to your Google Calendar. You pick, again, we're going to do the next 7 days. I think that's the easiest, okay? To make this even easier, I'm going to go down to importance. I'm going to get rid of the medium, and we're only going to talk about high importance, okay? So today's the 7th. Tomorrow, I know that I have 2 high impact news releases. One of them is at 10 a.m. in the morning. Happens to be a Bank of Canada interest rate decision, okay? Well, there's some news for Canada this morning. Pretty good news, talking about raising interest rates, 4 times next year, and, how some great comments. Just put it this way. There's some really, really good comments with Canada right now about how great their economy is. They have to raise it. Inflation's getting up to over 5%. Knowing that at 10 a.m., guess what? That happens to be a whole number. I know that there are not only 9 to 11, but also 10 to 12 binaries, right? Not number as in, 2-hour contracts at that time frame. I also know that there's going to be some inflation on an inflation rate in China tomorrow night. So that to me right now rings is, okay, that's one that I definitely have to be watching the charts for. I got to look at those shorter duration contracts. By the way that, price is moving right now, maybe we'll be at a reversal time for that one. There's not expected to be a rate change, but that's a big high impact release. Going into the 10th, right? What do we got here? We got inflation year over year in Germany. Yeah, it's kind of big. GDP, GDP is pretty good. Yeah, that could be a good one if you're up early in the morning. Inflation. Is inflation important? Right now, the inflation rate year over year is expected to be 6.8. Wow, that looks transitory to me, right? It was 6.2 previously, but now it's 6.8%. It's supposed to be 2. So, with that said, at 8:30 in the morning, does this give us the potential for some action on the 10th? Absolutely. You could trade it in the dollar. You can trade it in any of the indices. You can trade it in almost every single one of the currencies. Knowing that it's 8:30, that's perfect for me. I love 8:30. You know why? There's an 8 to 10 contract that I can trade, right? And it gets me out right after the open when the reversals typically occur. So again, great opportunity on the 10th. After that, we go into next week on the 13th. And again, I'm just using highs. There's a bunch of mediums, but I'm just trying to show you guys. Don't care about that one. Employment change, unemployment rate, absolutely care about that one. So that's 2 a.m. on the 14th. Westpac, not necessarily concerned about that, and that's the next 7 days. Okay, so literally, and again, just to give you guys an idea, this is actually what it looks like if I was going to do it. There's more things in here. Here's a speech from their main guy, the RBA Governor Lowe. That's like when Powell speaks. So you think Australia could move at that tomorrow night, right? Yeah. Absolutely. So there's Australia potentially moving. China data I'm not as concerned about. Initial jobless claims. You think initial jobless claims, continuing jobless claims, and jobless claims 4-week average, You think that this will be something that could potentially move the indices at the open? Yep, absolutely. And then we have Canada speaking, we have New Zealand speaking, Japan speaking, and then we go to the 10th. And again, we saw this the year over year. Look at all this in here. ECB president, basically their equivalent of Powell speaking at 4 o'clock. Yep, absolutely could be a mover. We have all the core inflation, right? Michigan consumer sentiment, same thing. So this is how you look at a calendar, and every single one of these is opportunity. So, just in the next 5 days, here's another 5 or 6 here. Tack those on to the 15 we already had. You see how there's a lot of these? And here's the thing about this, okay? This is looking at a calendar, but what's the last step is reversals. So any of those news releases out there that there was something said that, guess what? Maybe the market didn't expect, which happens 75 to probably 80% of the time. When there's a large spike in price, now number 3 kicks in, reversals. The normal reversal, not even news reversals, the normal reversal / quote profit taking times are 5:30 a.m. from the European Open, 10:30 a.m. in the US Open, and then again, obviously reversals from news, and that's going to be, based off of your calendar. Okay, so again, besides the 15 here, there's 10 more just between these 2 reversal times, and then you're at 25. You just add in all the news-based releases, and again, the news releases, and then if one of them blows up, which again, I would say 70% of them will probably blow up and spike, the high ones. Now you have a reversal possibility of all of them. And again, when you're thinking about reversals, you got to think about causality. Is there other news, and is it just profit taking? Okay, so a lot of things, whether you're going to pick knockouts or call spreads. All right. Yeah, it's a lot, right? You're like, man, does he ever breathe? Look how fast this guy's talking, right? So a lot of stuff in there. So let's go into the actual, let's go into the contracts and start talking about where the opportunity exists. So I know everybody's a little bit different out there, what they're looking at, what they're trading. All these, the next couple slides these are the knockout contract specs. If you don't know how to get to them, go to the drop-down menu on Nadex, and you can go to markets, and you'll see contract specs, and this will list these all out for you. And I kind of want to do a head-to-head comparison, but at the same time, I want to talk about the opportunity that exists using them, right? So you guys are very familiar with the Wall Street 30, the US 500, the tech, the small cap, right? I mean, we basically have the Dow, the ES, the NASDAQ, and the Russell, okay? When you're looking at these, the range is extremely important. And again, I'm diving in, and this may be a little bit over your head. I know, the engineers out there are looking at this, are like, oh my God, this is great. Look at this percentage. I don't come from an engineering background. I don't have that like engineering personality. So sometimes it's hard for me to look at this, but I've dissected these and looking at it, I found some really, really great opportunity. Example being, right, the Wall Street 30, right, as of 11/29 last week, right, when I put the slide on here, the daily ATR, meaning how much in a single day, what is the average movement that we see? It was 407. The range of a weekly contract is only 500. So we talk about, some big major moving days. You guys can see how call spreads, again, this is why if it's moving 407 in a week and 970, see, this is what I'm talking about. Look, in a single day, you can move 407, but its weekly average is only 920. You're like, wait a second, should it be like 2,000? No, it shouldn't, because there's always retracing. That's kind of why I have the daily ATR category over here, all right? But again, 500, the 50, the 150 range on the tech and the small cap, right? And then crude oil, the range is 5. I would say on the average day, I think right now the ATR, it says 3 here, but it did get a little bit slow. It's anywhere I'd say between 2.5 and 3 is how much oil can move in a day, typically. But at the same time, you see the week is only 4.37. The range is only $5, okay? If you guys have been watching oil, I mean, oil got over 2 weeks and went down, what, $20? So, I mean, it just kept blowing up contract. If you looked in the last day or two, again, we'll look at the chart, but it's blowing up some contracts already, right? And these are just knockouts, right? Now, there is some exposure to the whipsaws here as well. Gold, kind of the same thing, right? Now, like I said, if you guys want to dive into these a little bit more, go to the contract specs. It's a little bit easier to see. And again, these are all knockouts, and I'm going to kind of talk about why I think in the beginning of the week, all of these are great. And again, I don't have all of them listed, but on a day-to-day basis, I feel like the next couple of slides on the call spreads are going to be a little bit more beneficial to you. And again, I'm going to open up a chart to show you guys. But some of these ranges, 250, 250, 250, the Aussie's up like 80 or 90 points today in one day. And again, watching these daily ATRs, this is how, on average, how much it can move. Again, $23 in gold is per day. Range is 50. You can go through half of a contract in one day. Gold and silver have been a little bit rough, but again, the currencies over here, they've been flying. So this is kind of the side that I really want to talk about, the call spread side. All right. If you don't have a pad of paper and a pen, now is the time to get it. Okay. Here is, and I just have a couple of them. All right. I'm using the Dow because everybody are very, very familiar with the Dow. If you guys listen to the morning show, you hear me talk about short duration contracts. Okay. What I mean by short duration contracts is these 2 hours. Okay. The range of a 2 hour call spread is 100. Okay. The ATR, the average movement during that time frame, happens to be 113. Now, I may say, wait, what? Wait a second. Hold on. Go back. Does that make any sense? When you looked over here, you said that the range on the weekly was 50, but the daily was only 23. Wait, it's definitely less, right? Definitely less. Well, over here, again, the shorter duration contracts, you can see that the ATRs just happen to be above the range. So there's great opportunity in blowing a call spread out, particularly around that time. Okay. Now you're going to see in a second why I'm kind of harping on the indices in a second, because I mentioned it once already, and you may or may not have taken notes on it. A majority of the movement happens within 2 hours of the day. In the indices, most of it happens in the first 2 to 3 hours that the market is open, and then it gets quiet. Okay, so the reason why I'm bringing this up is if most of the action happens in the first 2 to 3 hours, why take a daily? I mean, why take the big daily? Or why would I take an 8 hour trade when most of it happens in 2 hours? And I could take smaller risk, right? Spreads different, closer floors and ceilings. Now, again, not that there's no reason to take the dailies. Again, in the overnight trading or a reversal, remember, if there's a big explosion in price and you're looking for a reversal, those take a little bit more time, so you need more duration. But in the morning, the fast and furious open, the Wolf of Wall Street, yeah, right here, 2 hours. Get in there, get funky, right? 100-point range. And you'll see why I bring this up in a second. NQ, same thing. 50 range, and the average ATR is 65. So it's even getting better, right? There's that much movement inside of a little 2 hour window, and I can blow the range out. And because it's a 2 hour duration, I got a lot of floors and ceiling really, really close together. Yeah, I hope you guys are getting excited. I'm going to show you a chart in a second. You're going to look at this and be like, what? I'm trading the wrong stuff here, is what you're going to say. All right. Now, crude oil, same thing. Okay. The range on look at this. The range on the 2 hour contract of oil is $1.50. Okay. The average ATR during that time period is about 65 cents, right? About 65 cents, right? Is there a big release that happens every single week in oil? I mean, think about it. We just looked at the economic calendar. I'll give you a hint. It happens every Wednesday, except that there's a holiday on Monday or Tuesday, and then it just happens to be on Thursday. There's an oil inventory report every single Wednesday. The asterisk, because sometimes it's on Thursday, right? Every single week. There's an API report that comes out on Tuesday night, and then Wednesday morning at 10:30 every week, except when it's on Thursday. When it's at 11, it will be at 10:30. So can I use the shorter duration contracts to do nothing but become an oil baron and trade the oil inventory report? Yes. Guess when most of the reaction happens? After the oil report comes out. So can I position myself ahead of time and take advantage of a miss in oil inventory? You guys feeling me? And that's why this is so great to trade on the shorter duration spreads. Now, you may say, well, why, Brian, why would I just do it with a call spread? Or why would I just do it with a binary, right? That's an absolutely amazing question. And I'm glad that you typed it in the chat and asked about it. Here's why. Everybody knows that there's one oil release a week. Binary contracts have a little bit more exposure to volatility. They know the volatility is there. So what happens is, to get the same entry cost, basically meaning, again, binaries and call spreads are exactly the same. The cost to enter the transaction is the risk that you have in the trade, right? It's the cost to enter the position, including the transaction, the dollar transaction fee per contract, right? So to get something out of the money for a lower binary puts price farther away. It has to move that far before you make any money. And if it pulls back just the slightest bit, you lose all of it, right? The call spread, any movement that it goes in the right direction, you gain some profit from it. So a lot of times what I find is the call spread tends to offer a better opportunity, but it's not always. Sometimes the binary will be a little bit better. It really depends on where the volatility is stacked that day. But it's a great release. Now, gold is one of those ones. Again, gold traders, you can trade gold. Gold has been having a rough time right now. Do we have inflation? Do we not have inflation? Is it transitory? Do we care that it's high? It's been a little bit rougher to kind of deal with, right? The euro. Now, I just have the euro because it's the most traded of the pairs. It's got a very, very small, the binaries have very, very small, pip differentials, spread widths in there. So there's a lot you can do with these as well. The call spread, same thing. Now, all currencies right now, I'd say, are probably a little bit more compressed, but you're able to see right now a 2 hour has about 100 pips worth of range. 100 pip move in the euro dollar is a lot, okay? The period ATR for 2 hours, it says 65, but that's, I would say right now that's more that based off of kind of the daily ATR. This is actually what I did is I did 100 period, but it was a little bit volatile last week. Right now, the currencies are great, and they're going to be good in the next, I'd say, 6-8 months. The reason why I think you guys should focus on kind of the 2 hour contracts and some of these call spreads right now is next year, everybody's raising interest rates. When you raise interest rates, you tend to have a large spike in price. Even though a lot of times it's already factored in, there still tends to be a bit of a reaction included with it. What can also happen, though, is you can have some whipsaws. So a lot of times I would be very, very cautious with the knockouts because, again, in the currency realm, whipsaws are very, very common. So it's kind of one of those things. If you can get a little bit out of the money below the floor of the ceiling before the news comes out, then you rock the call spread. If there's a huge spike in price, what you do is if a knockout did not break, but you're in close proximity and it's a decent level of risk, then you play the reversal with the call or with the knockout. So it's kind of like the 1-2 punch. You can use this for a pre and you can use the other for a post, but there's also weekly contracts over here as well. There's not weeklies for the indices. There are weekly contracts for a number of the different currencies. So if you do have a feeling that the dollar is strong or weak, you can take positions on a weekly basis as well. So again, just kind of opens it up a little bit more. Again, you can go short duration, you go long duration. Again, you can see how many different things, and this is just call spreads, 2 hour, 6 hour, daily, weekly. A lot of options to be able to trade, okay? Here's kind of a comparison between the two that I just wanted to kind of bring up, and then again, I'll go to a chart. And talking about the difference between kind of those shorter duration contracts and some of the knockouts, the knockouts on the right-hand side, they got a long duration. You can see this one expires in 4 days and 5 hours. The other one only has 7 minutes to go. It's much, much smaller, but this is the open. It's a 15-minute chart at the open, and this was back on the 29th as well. I actually have it drawn out today for you guys, but you can see the call spread, price opened up above. It was out of the money. It was cheap, and you can see it blew all the way through. The same knockout to be able to survive. You see how it's not quite at the top in there? It's and again, this one is not valid because they got reprinted, right? But you can see how we're kind of still stuck in the middle. We got more duration, we got more time, right, for the week. But tomorrow, if it pops back up, we lose all the profit in here. So it's just a kind of a comparison on this one. And I was just trying to put it up using like the same day, and like it's kind of like, well, if you see it here, this is top, ceiling, floor, blew it out, you capture all of it. Here, we're technically still in, and it's an area of buyers. And what happens if it turns and rolls back up again? You lose all your profit for the day. So it's kind of one of those things. The knockout was better for a longer term move, but again, capturing all that movement in one day, it was better to do the call spread. All right, so I'm gonna bring this back up, and I want to show you guys some charts. So, I guess we'll start off with the indices. Okay, so here is, let's see. I'm gonna put an arrow. 9:30 is right here. Okay, hopefully you guys can all see this. This is 9:30 right here. Okay, our morning show happens right 8:30, 8:45. Our morning show was happening right here. Okay, actually, normally we do our analysis on a 15-minute, but yes, there's the morning show right there on the yellow bar. So right before we got off, what I said was, this is setting up to be a pretty crazy morning. Why? Price was pulling back to a little zone where we like buyers from. So this blue window right here, this blue box is from 9 a.m. in the morning till 11 a.m. Okay. Right now, the market did absolutely nothing before the market happened. At 9 a.m., 9:15, nothing. 9:30, the market took off. All the movement today happened from 9 to 11. And now what has it done? Nothing, 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 and retracing back again. Okay. You may wonder what these boxes are. This pink, this purple, this blue, and this other purple over here. Those are the call spreads for the day. That's how big the call spread width is. So when I'm looking for opportunity, I'm trying to pair a product with a chart. Well, I know that this is how wide they were. It not only went past one, it went past four, basically the width of four call spreads. Remember, call spreads are kind of tiered a little bit all the way up. It blew every single one of them out in today's movement, right? Just this morning's movement. And what is it doing now? It's reversing back again. So anybody that took a binary till the end of the day and they were out of the money, guess what, guys? It's starting to get a little scary. It's coming back down again. Same thing with a knockout. If you were in a knockout, it's starting to come back down as well. And again, these are not stacked on top. The actual binary, or the actual call spreads themselves are more kind of tiered like this, right? They're tiered on top of each other. So it definitely blew more than four of them out today. And again, more weren't printed, but it was a very, very easy trade setup. What I'm trying to convey here to you is that, especially in indices, so much movement happens in such a short period of time. Take advantage of the best product that matches what it is. And again, taking something out of the money may have been a little bit riskier, but taking a call spread with a floor or ceiling in close proximity, yeah, nice. Here's the YM, right? The Dow. Here's the opening position, right? There's 9:15, there's 9:30. Okay, 9:30 is the big green candle. At 9:15, right below it hit. Again, doing the same thing, looking at your 9 o'clock low, right? There's your 9 o'clock starts right there, and it goes till 11, right there. Right there, okay? How's that for a draw? All the movement today, and again, we're already pulled back over 50% of what the opening print was. We knew that 35,000, we mentioned this morning, at 35,800 psychological level. What did it do? Rallied up at 10:45. It hit, and then remember we talked about that common reversal time at 10:30 in the morning. I missed it by 15 minutes. Sorry, but it hit a psychological level at 10:45, and then is reversed back again. But had you been in a call spread, this pink box right here, I'll change it to orange so it's different. This orange box is the width of a call spread in that 2-hour time frame. So there's one, there's two. I mean, again, they overlap again. But do you see how no matter where it was, inside of that 2-hour window, you blew the thing out, right? You guys see how you blew it out? But had you used daily, what was happening? It started to retrace back again. So really the strategy is capture the movement where it is. Use the smallest product that you can. Why? Because it doesn't have to move as far, and because it will give you the cheapest risk of entry, as well as the, I'm going to say best probability. But again, using 2-hour binaries is, obviously they're very close because they don't expect huge movement. A daily at this point is already kicked back again. You probably would been losing money on it versus blowing something out of the water. All right. Now, if you have never looked at call spreads, they're going to be a little bit funky. You're going to be like, what am I doing? It all starts with chart analysis. So chart analysis is really where you need to begin. Again, if you guys are having problems with the chart analysis, join Todd and I in the morning. But literally the last thing that I said, if you don't believe me, go to YouTube. I literally said, there's going to be some really good opportunity this morning. Drop down to your 15-minute charts. We know that this is we obviously this is marked off. We've had this for a while. We said it. I'm trying to give as many secrets as I can. We don't give out trade recommendations. We talk about levels where we see probable buyers and sellers. It's your job to match them to the correct product. But again, I'm just trying to show you guys using something like this. We know how the time frame. This is, you guys can see there was our 2-hour top and bottom. There's the opportunity that exists if you do the extra homework every morning. And again, you don't need me to do it. You can do it yourself. But there's the opportunity using something like a call spread versus a knockout that is now already retraced. And let's see what the retracement looks like so far. Yeah, it's already retraced, 61% of the way back down again inside of a knockout versus capturing your profit. You ever heard strike while the iron is hot? It's kind of what I'm getting at, right? And again, if you're new to call spreads, what I would say is go look, and you may say, hey, listen, I saw you did something with ATR. Go look at the ATR, see what's possible, right? I mean, you can see that here's my ATR. Actually, I have it set for 100 still to kind of give more of a smooth look, but you can see right here, the ATR during that time frame is typically about 62, right? Typically about 62. Now, today was a good morning, sure, but here's another example using the dollar CAD, okay? You may say, oh, this one's even busier. I'm totally confused now. Basically, guys, we have been talking about there's an area of sellers. The blue box, that happens to be the weekly call spread, okay? That's the weekly call spread. It's what, half of the way down? Actually, that may have been, yeah, that's the call spread. It actually goes lower than this. I just moved it up so we can you guys can kind of see where its kind of peak was, but you can see what it's done from Sunday night. It's the nothing but come straight down. Actually, this is the knockout. It's the blue knockout from Sunday night, okay? There's your blue knockout, not quite out yet. The red box happens to be the daily call spread, okay? Now, why am I showing you this? You just told me, Bryan, that the 2 hours were the best. Okay, the reason I'm showing you this now is because, again, remember we talked about the economic calendar, right? Remember we talked about the economic calendar? Yesterday, actually, I guess, basically, I knew that there was going to be news yesterday in dollar CAD. Again, this was the oil push down. I'm sorry. It's this one that I wanted to show. Actually, either one of these two doesn't really matter. Let me go back. Let me do dollar CAD before I confuse everybody here. Basically, this is the rollover from last night on Monday night. We knew that yesterday, suddenly the OMA what became nothing. And again, we expected oil to continue to rise. Oil is continuing to rise. And all we did was we played the continuation. Nadex reprinted contracts. There was the daily. And again, going into Monday, we didn't know what Omicron was or wasn't. But yesterday, somehow it became not a big deal. And all that did was raise oil, and we knew the dollar was going to get strength, right? But yesterday, when it became non-existent, that's when it became, or not existent, but not as important, we had the drop. Here's the economic calendar. As you guys can see, let me remove this level because 1, 2, 3, 4. Here's news, okay? So from last night, late last night until now, you can see that in the Aussie yen, we were up 80, it went up 80 pips total to this peak. There's 80 pips from news until now. Could you have traded a call spread with a 250 pip width? Yeah, absolutely. You're 80 points in. It would not, your risk would have been very, very minor. Same thing, Aussie yen. We knew we had a level. We were waiting for it to bounce off this level. We mentioned what a Harry Potter was in session. And again, there was our news release. There was the RBA statement. We knew that nothing was going to change, but we expected a positive result from the Aussie. And the same thing, you were able to get into it. So again, you could have traded this one probably with binaries too, but fearing a pullback, a call spread would have been the way to grab this one. All right. So again, matching your economic calendar with your trade, and then bring it over and have it pair with the proper asset for that time frame is really all you need to do. So, all right. With that said, let's set our goals. All right. So we got about 2-3 minutes. I don't want to go super late. I know Todd's been here all day. What I've just given you has literally been like drinking through a fire hose. Most of you probably had, you knew what a knockout was because they were cool and new, right? Call spreads, you knew that there was a button there, never looked at them, okay? Hopefully at this point, you understand that if you are trading the U.S. market, you absolutely need to be going down to a 15-minute time frame and looking at those 2-hour call spreads first thing in the morning because there's so much opportunity there, okay? What you should do right now is create a 30-day plan, okay? Based off of everything, not just my presentation, based off every single thing you looked at today, right? Heard today. Think about your year thus far in trading or what you wish your trading had been and make that your goal for 2022. Put in some type of accountability mechanism in so you can reach your goal. I would say absolutely, without a doubt, find a mentor, not only a person to hold you accountable, but help get you over the potholes. It's extremely important. Introduce a friend to trading. You may say, why would I do that? All my friends tell me it doesn't work. No, find a friend that's going to trade with you. Why? Because 2 heads are smarter than 1, okay? Having someone that's at the same state, and trading and having the same passion, join a trading club, I don't care. But network with like-minded traders. It's always a good way for you guys to expand your knowledge base, both, support, knowledge, everything. It's awesome. And then if you guys are around, join Todd and me each morning for, morning market movers, right? We're going to do it every single morning. Todd and I absolutely love doing it. As I mentioned, we talk about setups and potential opportunities every day. No trade recommendations, but we talk about the setups that, we're looking at what's hot in the morning. And again, if you can take something you learn, whether it be your adoption of call spreads or knockouts today, and mix that in with your binaries, so be it. That's your goal. It's your goal. Stick with it. And again, rock 2022. But again, your 30-day plan starts now. You got to start putting the work. Write it down is kind of my last recommendation for that. So I'm going to leave you with two little quotes. I always like to do it. One is never underestimate the power you have to take your life in a new direction. Everybody always says, I can't do it, or everyone's going to tell you can't do it. But when you're motivated, you can do anything that you want to do. And the next one is life's not about expecting, hoping, and wishing. It's about doing, being, and becoming. The best way to do that is come up with that goal, write it down, and then give yourself directions on how to get there. And then find someone to hold you accountable. That's all I got for today. Hopefully you guys learned something new. And again, I can't see the questions, but again, if you guys ever, if you join us on our YouTube sessions in the morning, absolutely ask away. We answer everything we possibly can. Thank you guys so much, and I appreciate the opportunity to talk to you.
Thank you so much, Bryan, for that. Yeah, the questions, to be fair, I think you probably know what they are. It's the drinking through a fire hose. There was a lot that came fast and furious there. Now, with that, I will say to the audience, these recordings are going to be available. So you can go back through that at your own pace. You can also have the slide deck in front of you so you can take notes on it, but you're going to need to email customerservice@nadex.com and request the slide decks. And I do like the plug for the morning analysis sessions, our morning market movers. I can't say enough how much people find that helpful to get an idea of where they might want to be looking for hot spots in the markets. It's also a great way to get a rundown of the headline news that happened overnight, as well as helping to focus on upcoming economic announcements that might be occurring that day or later this week. So for instance, we've got CPI on Friday. That's the Consumer Price Index, and it's going to give us a glimpse into the inflation picture and how it may force the Fed's hand in making moves on the asset purchase program they've been running and how they're tapering it off quickly, as well as when they might start being forced to raise interest rates. Now, while the PCE, the personal consumption expenditure, is the Fed's preferred measure of inflation, CPI is still very important. So again, I want to encourage you, join us. It is on the Nadex YouTube channel, 8:45 a.m. Eastern every morning, and we go for about 15 or 20 minutes. It also gives you an opportunity, if you type questions into the chat, we can try to interact with you and go through things a little bit more slowly if you're looking for a little bit more help. So it's a really nice community we've got going on. It's actually a little bit funny too, as people chime in, as people become more comfortable.
I was going to say, we have jokes, we have coffee, and we have a blast. We have a really, really good time with it. So like I said, it doesn't have to be all business, all serious. We do have a good time with it. And again, hopefully you guys pull something from it every single morning.
Yeah. Were they asking you to do a Marvin the Martian voice? Or make a reference to your
I was going to say, I mean, I don't know, maybe, but I mean, if they watch the playback in half the speed, they may understand what I talked about. It may slow down enough that everybody can, fully get me.